Welcome back. The best multifamily podcast ever. And I'm here with my accountability coach, my good friend, Mr. Robert Damigella. Bobby, how you doing?
Hey, Charlie. How are you today? Good to see you, man.
I'm well. It's always good to see you.
Good to see
and
you.
This is the type of podcast where we just jam and jaw things out and talk about the multifamily business. And what we're going to do today, Bob, is I'm going to run through the 7 rules of multifamily investing. Okay.
Yeah.
And I want to get your see. I'm going to play Stump the Professor with you, which really isn't going to be all that hard.
It's not going to be that hard, Charlie.
Oh my gosh! Hey, so let's talk about your biz. What's going on in the multifamily financing business?
Well, as you know, I work for Marcus and Millichap Capital as senior director, and we financed a lot of business, about $6 billion last year, and it's very busy. It's extraordinarily busy. There's a lot of deal flow. Rates are still very, very attractive.
Isn't that amazing?
You can't fight the tape. I mean, it's a great environment right now.
Yeah. And as we speak, hold on. Let me tell you what the market is doing right now. Look, while we're talking, why don't you tell us, like, if we're pricing out our deals on any the software that we use, what's the what number should we be using for interest rates?
I mean, I think it's pretty easy. You can go into the mid 4s, depending on the size of the deal, as a benchmark, and then it could adjust from there. I'm not seeing a lot, with a 3 handle on it, but depending on the deal, the LTV, if it's low enough, there are some cases where you can get that low, or if it's a floater or something along those lines. But I would tell you, Charlie, still rates are extraordinary, and it's really driving so much business for us on both the refinance as well as the acquisition side. Wow. Really great.
What about the equity side? You guys getting involved in that at all?
Yeah, a few deals. I mean, they have to be select deals, and we've done some stuff together.
Yep.
And the deal one of the deals, for example, I'm working on is a giant 260 unit garden style new construction deal where I'm working on raising them probably $6 or $7 million in equity. But you know what? He's already done one already.
Yeah.
We're financing that one. That's incredible.
Now, where is that located?
Those are in Massachusetts. Both of them.
Okay. Wow.
Yeah.
Wow, man.
$50 million is the loan amount we're doing on the takeout for his construction loan for the first one. And suffice to say, for all of you potential developers, that his cost of construction and development was about $42 million. So he's doing a takeout of 50. Not to mention his $2 or $3 million structuring fee that he did as a developer. So he's
good for him.
Great business.
Is he going to own and operate it?
Yeah. Oh, of course. 40B stuff. So, yeah. Only partial, so it's okay. Beautiful stuff. Yeah, whatever. It's mostly market.
Another reason to get out of Massachusetts.
There you go.
All right. Hey, Bob, I got my 7 questions.
Okay. Bring it on, Charlie.
And listen, but let me just tell the audience here that I think Bob's seen these things about 5 times already. All of it will be like a case of first impression for him. This is the kid cheated off everyone's paper in school because he just couldn't pass anything.
I have the memory of a gnat, so
yeah.
Yes, we can do.
Like a Tito. Call you Tito. All right, pal.
All right, talk to me.
Number 1, what is the biggest lie in multifamily? Oh, you are so disappointing me.
Price.
The asking price.
Yeah,
asking price. Gosh.
It is the biggest lie.
It is a lie. I tell my students, they call me up and they say, hey, my price, I can't get near the asking price. When I work up the numbers, what should I do? And I said, what do you think you should do? You make the offer and you move on to the next one.
It really is. Whatever the broker can figure out and make up and can possibly get is what he comes up with.
Exactly. And they make up the numbers. And the thing is, the reason why you make the offer is because of the thing that Woody Allen said. You remember what Woody Allen once told me, Bob?
That wasn't part of the quiz, Charlie. Come on.
No. This when you and I had him over for dinner that one time, he said 90% of life is just showing up.
Just showing up. Yeah.
All right. Making an offer is that 90%. That puts you out above everybody else.
Yep, for sure.
Yep. So just make the damn offer, for crying out loud.
Yeah.
Don't.
And it doesn't have to be at the ask, and that, you just have to understand that. Run your model, as you know, if you taught me,
Yeah.
run your model, structure your deal based on your economics that makes sense for you, and make your offer. That's it. Price
Because
doesn't
remember,
matter.
part of this business, as I always say, this is a sales and marketing business. Not only do you have to sell your offer to the seller of the property, then you got to turn around and you got to go sell it to your investors.
Yep, exactly.
So, if you offer the guy with the price that he's looking for, your investors aren't going to be interested.
Right,
There's
exactly.
a reason why you get compensated nicely in this business, because you
There
show
is.
up.
Yep,
Make the deals happen, and they have to be deals. So just make the offers.
yep.
All right, number 2, Bobby. Okay, this one I always get a lot of grief over. Life is too short to own.
Would that be C-class properties?
Yeah, Bob, thank you. Boy, you actually might. I mean,
I studied before we got here.
so let's talk about it. Life is too short to own C-class properties. Now,
Yes.
one of my most favorite students, Dougie Boy.
Yep.
Love him.
Doug.
Nicest, and actually, he's been on the podcast. Doug Benson. We were joking about him on the podcast. But he is the king of the C-class properties, and he has made phenomenal amounts of wealth from
Right.
C-class properties.
Yep.
And he lives a great lifestyle from C-class properties. But what he does is he does something that is really unique, and I think this is good, is that when he buys a property, his intent is to put new everything
Right.
in that property. So
Yeah.
when he owns that property, there's nothing more to do to it. He
No.
doesn't get any repairs and maintenance phone calls. He doesn't have a huge $900 per unit per year repair and maintenance budget, because everything's already taken care of.
He invests. Yeah.
Yeah, he plows it back into the property.
Yeah.
And let me tell you something. When he's done, it's not C-class. It might be technically because of the area and the tenants and what have you, but he has brought the quality of that asset up to a B, and that's a much easier property to own and operate. So
That's where his upside is, for sure.
yeah, when I look at when he and I go head to head on this conversation, I just have to sit back and agree with him. But I always have to tell him, Bob, Doug, you don't own C-class anymore.
Not anymore. Well, I guess that's the whole point, right? If you're going to buy C-class, it's still life is too short. Make sure they're Bs by the time you're done.
Oh, I know, but Bob, you know as well as I do, some of these people don't go into those types of deals having priced it correctly and having taken into consideration the rehab cost to do just that.
Right.
And they think they're going to do it on current cash flow, which is the toughest way to rehab a property.
Yes.
Very, very tough.
Yep.
Yeah. All right. Hey, you know what? I got to give you a little bit of credit there, pal. You're right now. You're 2 for 2.
2 for 2.
Yeah. It's almost like we've done this before.
I don't know. You might. You're gonna try and stump me here. I mean, come on.
I think you're gonna get this one wrong, because this one's kind of esoteric. Okay, right. Number 3, owning blank changes your life.
Multifamily properties.
Oh my gosh.
Oh
wow.
How?
Someone? Okay, wait a minute.
Charlie, that flashcard is behind you there.
Is there a proctor in your room? Is there a proctor in your office right now? Because you're nailing these, pal.
I'm nailing them. Yeah.
All right. Remember one of my students, Molly. You knew Molly. She had this property that she had under contract. She'd done the due diligence. She was moving forward, and then she kind of got cold feet, only because she realized for her to achieve her value play goals, she's going to turn the whole unit. She's going to kick everybody out. And when she was down there doing the due diligence, she got to meet the crowd. And she thought, I can't do that to these people. I just can't do it.
Yeah. You know? I remember the story. Yeah, I remember her. And that was a lifestyle choice. It
is. And like, you look at it and you say, like, well, owning multifamily changed your life. Yeah. So are you prepared for that change? Right. And she saw that change ahead of time. She saw it coming. She thought, it's not me. It's not me. And I was like, so proud of her. That was a really stand-up thing to do. Then get back out there and find the right property where you're not going to have those types of issues. Right. I thought that was excellent.
I think that's and I think it's part of what is in your program is a little bit it's inherent, not overt that you mentioned this, but you make it clear to people that this is a lifestyle change. This is a business. And you need to be prepared for it. So,
and let me tell you something. And this is probably, everyone will tell me I shouldn't say this, but I'm going to say it anyway. When new people come into my program, and I do the action plan. You
Yeah.
get to meet them. You kind of get a feeling early on,
Right.
whether this guy's long for the business or
Right.
whether he's just going to be a flash in the pan. Listen, all businesses are like that. I mean, even your business, the old insurance business,
Right.
you get people coming in, finding they don't like it, and they get out. That's fine.
Right.
That's what it is.
That's what you're all about. Exactly.
Yep.
I know some of them off the top of my head that I've worked with on the accountability group that I know, Charlie, no matter how much I push and prod, maybe they're not ready. So.
Yeah. But okay, I had one. I was thinking about another. They came great guns, husband and wife, right out of the program. And it's like, just thought, you know what? It's that this. I don't think this is right for you because you expect it all right now. Right now.
Right. Yeah.
And it's not every day is going to go perfect for you. So yeah.
Well, the inverse of that though, Charlie, is and I've learned from your program being in it too, and for my success, is that it's with time though, if you stick with it and you do the things you're supposed to do, you will get success.
Yep, absolutely.
So it's a commitment thing.
Absolutely, and that's the thing is you got to stick with it. Just keep making offers, and then make sure, like Molly did, make sure the property is the right one for you, and. Right. And then that's how you're gonna. And I tell you, I'm blown away by how many success stories I have of students that have done just that. And that's exactly the model, Bob. That's exactly the model.
Well, you remember we've got the conversion rate spreadsheet, which allows people to put in the number of LOIs they're doing, everything they're doing on an ongoing basis to make sure they hit their numbers and get that offer out, which I think is, pretty cool.
Absolutely, because this is a sales and marketing business. Which means it's a numbers game.
It's a numbers game. Total numbers game. Yep. Yeah.
Just keep doing the numbers. Okay.
Right. What do you got now? Bring it on.
Right now, you would end up with a 40% if you get the rest of them wrong. Okay. Okay. Number four. You can fix anything on a multifamily property except
overpaying.
Oh my God!
My goodness!
Oh my gosh!
How does he do it?
There's got to be. You got to have the answers written down there. That's all I can say.
Unbelievable.
Yes. Okay.
You cannot overpay, Charlie.
No, Bob. Let me tell you something. And this is. I said this earlier. I was doing a recording for somebody earlier today. I used the same example. There is some guru out there who says you can overpay for multifamily property because the price just keep going up on them. Yeah, sure. And you know what? I said, well, that guy must be 7 years old because he obviously didn't live through the last crash.
Right. At some point, they go down.
That's how it works.
Potentially in the short term, right?
Oh, yeah. Well, short term, but still, I mean, the last crash, it took, depending on what market you're in, it took 7 years and it didn't even break even by that point. It didn't even get back up to the original levels. I mean, even some of the single family homes in my community are still slow in coming back.
Oh, yeah.
So, yeah. No,
go ahead.
I tell you, if you overpay for that property, you might as well just go drop the keys back on the bank's desk and walk away because life's too short. Life is too short. So, yeah, and that's the thing is I won't let any of my students overpay for a property. It's just not worth it. Why?
Well, you beat the snot out of that to make sure that no one overpays.
I can't let you do that.
Sometimes you miss a deal.
Yep.
But you know what? Here or there, but you know what? It's better to be conservative. And the reason I'm saying this also is that I'm on the finance side.
Yeah.
So bring a deal in that's, you've priced at a 5 cap and the market's a 6 cap or a 7 cap, but you want to pay for it. You want to do it? Go right ahead. Or you can come up with the additional equity. Go ahead. But, you still overpaid. So.
Yep. It's not going to work. It's not going to work. I mean, what you're doing when you do that is you're setting your investment business back 5 years.
Right.
That's 5 years of money you have to go back and earn back.
Yep. I never thought of it that way, but yeah, right.
That's what you're doing. So just don't do it.
Right.
We don't have enough time in our lives left to make those types of mistakes.
Right.
That's my. I mean, and I said to some people, I said, listen, you're better off not even doing anything.
Right.
Just don't do it.
Kind of like this quiz, right? Life's too short to make mistakes.
Because this recording is going live, Bob. I'm telling you that right now. It is going live.
No mistakes for me.
All right, number 5. This one, I just had this conversation with 2 students yesterday. Number 5, you can find deals in your
Backyard.
own backyard.
In backyard.
5 for 5. You're dying, man. You don't
What am I
even
going to get here? I want like
pull it
a
out of your
trophy or
butt
something.
right now.
What am I working towards? Am I getting a trophy or a?
You're getting a participation achievement award.
Yeah, that's about right for you, Charlie.
That's all I'm giving out. Sorry. So no, but you can find deals in your own backyard. I had a student of mine ask me yesterday. He's like, "Well, should I go down to Fort Worth, Texas?" And this guy's in Pennsylvania. I'm like, "No. This guy he's making a living
Right.
fixing and flipping houses. He's built the system. He's got the marketing in place. He's got the direct mail program in place. He's got people who call, the skip tracing, everything,
Yeah.
all from right there. He is killing it on the single family side. And like every single family guy, they want to get into multifamily.
Sure. Next step. Yeah.
So he asked the question. For some reason, some guru made him think that he's got to get out of his backyard and head on down to Texas.
Charlie, let me tell you, I work at Marcus and Millichap. This is not a pitch for Marcus and Millichap, but the point is, I see deals every single day here in my backyard. You couldn't be more correct.
Yep. No,
I just had a deal put on my desk, actually down the Cape. I can't tell you about the deal, but it's down the Cape. It's a 42-unit apartment complex.
Oh yeah, I just bought that one.
You bought it? Okay.
I just bought that one. Sorry.
Right. Yeah. But they're out there. The point is, you're right. Plenty of them here. Plenty of deals. Plenty of deals.
Yeah. Yep. I'm telling you, it's and the guys that I grew up idolizing in this business, the Sam Tamposi's, the Jerry Nash's here up in New Hampshire.
Yeah.
They made all their money right here.
Right here.
You made it right here in Nashville, little sleepy little town.
Yeah.
And just if you don't overpay for property, if you just make $1 and spend 80 cents, you can't help but make a killing in this business.
That's life anyway, right?
Yeah, exactly. That's business. That's business. Number 6.
Oh boy. How many more we got? 2 more?
You got 2 more, pal.
Okay, I'm sweating.
And you're getting them all right. And you already got the bonus question right. So you get 1 more right, and you're going to end up with 100.
Okay. Here we go. Bring it on.
Number 6. This is my most favorite one. This is my number one. This is my number 1 rule. What's my number 1 rule, Bob? I don't even need to repeat this one for you. What's my number 1 rule? Always remain
in control
of the deal.
Of the deal.
Yep.
That's right. Yeah, absolutely.
You got it right. I'm going to give you credit for that one.
I got it.
You did. You didn't even ask the question. I gave 2 words of the question, and you got it right. All right, you got points for that one. Okay, yes, always remain in control of the deal. This is crucial.
Yeah.
And it begins at the LOI stage.
It does, yes.
And I tell you something. All my students, they're not allowed to send out anything unless I've had a chance to look at it, because I don't want them to make a mistake that's going to come back and haunt them. And I tell you, Bob, it burns me up when hey, I got an accepted offer. Oh, I'm thinking to myself, I don't remember looking at any offer for him.
Right.
And I send it on over, and I look at it, I'm like, where the hell did this come from?
What is this? Right.
What is this? This doesn't make any sense. It does not even, the numbers don't even jive. And he goes, oh, I said, did you send this to me? No, I didn't. I said, listen, here's what's going to happen with this deal. This is going to go wrong, then this is going to go wrong. And he's like, oh, no, we'll be fine. Sure enough, guess who's always right, Bob?
Uncle Charlie.
Uncle Charlie.
Oh, yeah.
Yeah, and I tell you, it's all you got to do is let me take a look at it, because if you get it wrong at the very early phase of the LOI phase, then it goes on for the rest of the deal.
Cascades through the whole deal. And again, to your point, I see it every day. Yeah. There's a battle. That battle, the broker wants them remain in control.
Oh,
some inside tips.
Yep.
To your listeners, the broker wants to be in control, and everybody else, and the seller wants to be in control.
Yep.
So yes, you couldn't be more correct. You really couldn't be more correct.
You must remain in control of the deal, because you are the only one showing up at the closing table with a checkbook. Right. And so that you better be darn ready to write that check when you're doing it. Because Bob, I'll tell you, the reason why this is my number 1 rule.
Right.
Why do you think this is so important to me?
Is this an extra credit question?
This is 6B.
6B. All right.
You can get Friday off if you get this one right.
I don't have to do next Thursday's accountability.
You
I'm no
you
longer accountable.
you don't have to be accountable anymore.
Exactly. What was the question?
What's a website for my new favorite website? What's the web address for new? No, the question is, why is this my number one rule? Why do you think this is so important to me?
Because without control.
No, now you're just making stuff up. Because I lost control of a deal.
Oh, okay.
Because it happened to me.
Well, I don't want to ask you a question because this is you asking questions to me.
No.
However, let's tell your listeners, if you lose control of the deal, what? Should we leave the deal?
No, you try to get control back. Figure out how to get control back.
Okay.
You figure out what went wrong.
Right.
Why did it go wrong? And what are the next steps that are going to happen in the contract as a result of that screw up, or the result of losing that control? And is there any way that we can do something to get control back? One of the easiest ways to do it, if you still have time, is to take the deal out of contract. Leave the earnest money with the escrow agent, but take the deal out of contract until you've fixed it the way it needs to be fixed.
Right. Okay. Got it.
I'll tell you, after that point, if you're beyond that point, boy, you might be in such a situation that you're either going to close or you're going to lose your earnest money.
So you only have so many levers.
You really do. That's why you've got to do it right from the very beginning. Bob, that's exactly right. You've got only a certain levers that you can throw to fix it.
Right.
And then once you miss that,
you walk if you can.
Yeah, if you can.
Okay, got it. Right.
Yeah. All right. Last question. Oh, your mother's calling.
Yeah.
She wants you home. Okay, number 7. You ready?
Yep.
Here's one of my favorite ones. If you're not making offers, this is nothing more than a very expensive hobby.
That's right.
All right.
Okay. Gotcha.
You might as well, if that's the way you want to be, you might as well just keep living over your mother's garage, like Bob. Because I can't help you. You got to make offers. The only thing
you got to do, take action.
Bob, you can't control the seller saying yes. You can't control the bank saying yes. You can't control the investors saying yes. You can't control getting to the closing table. The only thing you can control of yourself and your actions is making offers. All right, Bob. Hey, always a good time. I'm going to see more of you. I'm going to see you at my event in Boston.
I'll come over. Yeah.
Check out my webpage for the upcoming dates. I just did one in Santa Barbara. I've got one coming up in Cleveland and in Boston. And then Deb and I are going to be working on my schedule going forward. If you want me to come to your RIA clubs, let me know. Always a pleasure talking with you, Mr. Damigella.
Always a pleasure, Charlie, to see you.
Thank you, Bobby. Good to see you, pal.
All right, take care.
Signing off.
Okay.
This is Charles Dobbins, the multifamily attorney, the founder of the Multifamily Investing Academy, along with my good buddy Bob Damigella, saying good night.
Adios.
Adios.